Hi friends, welcome to the NISHCHAY series of ABM. In NISHCHAY series, we are covering MCQs plus case studies. MCQs are related to theory as well as numericals. Same thing over here. Case studies related to theory as well as numericals. And these are repeated from the exams, kindly note. So that's why follow the series completely, follow this video completely, like this video. Share it with your friends, share it on all your social media platforms. Let's start. Okay. From which of the following measures, when deviations are taken, mean deviation takes its minimum value? This question is repeated in every exam. This question is repeated in every exam. Every exam you will find this question. When you take the following measures, quartile deviation, mode, median and mean, then from where the deviation from these elements is minimum? Which of them? Is it from median? Is it from mean? Is it from mode? Is it from quartile deviation? Those who have read it, they'll immediately answer it. Those who have not, I'll explain you, not an issue. Okay, I'll explain you how it is to be done. Firstly, what is the answer? Give me, what is the answer? The answer is median. The deviation from the median, mean deviation from the median is always at its lowest. Now, how will you prove this? You'll say, sir, how do you prove this? I'll prove this. Very easy. Okay, let's take 4 numbers. Chalo, let's take x. Let me take it only 3 numbers. Chalo, only 3 numbers I'll take it. Or 4. Let's take it 4. 5. 5 is better. 5 dividing by 5 is easy, isn't it? 1, 2, 3, 4, 4. Abrupt numbers I have taken. 1, 2, 3, 4, 4. Now find out the means. Here, one thing you should note, whenever you find out this deviation, you must always take the absolute value. Absolute value means median. Okay? Means modulus. So first find out the mean. Mean is what for this? Mean. 1 plus 2, mean means average. 1 plus 2 is 3, 3 plus 3 is 6, 6 plus 4 is 10, 10 plus 4 is 14. 14 upon 5. Upon 5. Total elements 5. So 14 upon 5. What is it? 2.8. 2.8. Correct? Do it everyone. 14 upon 5. What do you get? 2.8. I think so. Correct? 2.8. Mean. What is mode? Mode is which comes maximum number of times. So who comes maximum number of times over here? 4. So mode equals to 4. What is median? Median. Median means arrange the numbers in a serial order and then whatever you get as a central number. Central number is 3. That is basically median. So 3. So now we have got mean, mode, median. Now what you do? Find out the deviation. But kindly remember, whenever you find out the deviation, take the modulus of this. Everywhere. Modulus. So modulus of x minus mean. Modulus means always a positive value. Kindly note, only positive value. Then modulus of x minus mode. Modulus of x minus median. X minus median. Okay? So take the modulus everywhere. So x minus mean. So what is this x? 2.8. So 1 minus 2.8. Look at this. 1 minus 2.8. And modulus of that. Here, first one I will show you. Second one directly we will write it. So 1 minus 2.8 minus 1.8. Modulus. So it is 1.8 plus 1.8. Check this. 1 minus 2.8 and modulus of that. 1 minus 2.8 is what? Minus 1.8. And modulus of that means only positive sign. So 1.8. Same. Now same for everyone. 2 minus 2.8. So, what is that? 2.8, no? Yeah. So, minus 0.8. So, plus 0.8, 0.8. Modulus. 3 minus 2.8, 0.2. This is already plus. This is 1.2. 4 minus 2.8, 1.2. All these 1.2. Okay. Similarly, find out for mode now. 4. 1 minus 4, minus 3. But modulus. So, plus 3. 2 minus 4, minus 2. But modulus, plus 2. 2 minus 4, correct? Yeah. 3 minus 4, minus 1. So, plus 1. 4 minus 4, 0. 4 minus 4, 0. Now, this median. 3. 1 minus 3, minus 2. But modulus, plus 2. So, 2. 2 minus 3, minus 1. But modulus, plus 1. 3 minus 3, 0. 4 minus 3, 1. 4 minus 3, 1. Do the total. What is the total? 1.2 plus 1.2, 2.4, 2.6. This total is, this is again 2.6. So, 5.2. So, total is 5.2. 5.2. Right? Are you getting this? 5.2. 2.4, 2.6. This is 2.6, 5.2. Correct. And this one now. 3 plus 3, 6. This one now. 2 plus 3, 5. This is the total. But what do you want? Mean. Average you want. Average. Mean. Look at this word. Mean. Average. So divide this. 5.2 divided by 5. 5.2 divided by 5. So it is what? 1.0 something. 1.04? Yeah, 1.04. 1.04 average. This is the average required. Average mean deviation. This is what? 6 upon 5. So 1.1 over here. So 2. 1.2? 1.2. Correct? This is 5. So 5 upon 5. 1. Who is at the lowest? Median. Always remember to take the modulus. Only in modulus you will get the correct answer. Because deviation, whenever you take, you have to take the modulus only. Okay, so this is the answer. So it's not that simple. Remember. How many of you got this? Type yes in the comment section if you have got it. Type yes, because this numerical comes, numerical you say, theory you say, it comes almost in every exam it comes. Because this is the most difficult question. Okay, move on. Consider the following situation and identify the bank guarantee referred over here. So, which bank guarantee will be used? A company purchases a furniture on credit basis with the terms of payment being equal installments. Okay, so basically you are purchasing something on equal installments. Now for that you have to give a guarantee. You as a bank have to give the guarantee to some shopkeeper, whoever it is. Getting this? What is the question? Got it? See, you are a bank. This is the company X. Company. Your customer. This company is your customer. Okay? Now this X wants to purchase a furniture from this shop. Let's say shop or company, anything you call it. Now the payment, this X is going to pay this guy is in installments. Installments. But the shopkeeper says, I don't trust you. Here, shopkeeper is saying to X, I don't trust you. I want some guarantee from your bank that you will pay. If you will not pay, I must get money from them. So then the guarantee which you give is known as which guarantee? Advance payment, deferred payment, financial guarantee, shipping guarantee. Which is it? Advance payment, deferred payment, financial guarantee, shipping guarantee. It is? Whenever you are in installments, it is called as deferred payment guarantee. deferred payment guarantee. Whenever you are giving a guarantee in installments, it is called as deferred payment. Got it? Financial guarantee is basically unsecured guarantee. Shipping guarantee is given in terms of when you have the export documents reach the port, but export goods have reached the port, but documents have not reached. In that case, you give the shipping guarantee. And advance payment guarantee is different. Means basically advance payment whenever somebody has to give. Suppose you have to purchase something, you have to give some advance payment. You are not having the money. For that, this guarantee is given. So here the case is what? Installment payment is there. So if it's installment payment, it's called as deferred payment, DPG. Deferred payment guarantee. The method of solving this, everything is same as your normal guarantee. Okay? Which among the following laws are applicable for different kinds of borrowers? Identify the correct match. Correct match. Okay? Different kinds of borrowers. Identify the correct match. So individual Indian Contract Act, HUF Companies Act. I think so. Correct or incorrect? Identify the incorrect act. Incorrect here. It should be incorrect, not correct. Incorrect. Because all are correct except one. I am seeing this. It's okay. Correct is also okay. Because options are there. So identify the correct match. So individual Indian Contracts Act, HUF Companies Act, Partnership, Indian Partnership Act, Statutory Corporation, acts that created them. So what is correct over here? Which one? Which one is correct over here? Now see here, A and B are correct. See here, HUF is not governed by Companies Act. How can HUF be governed by Companies Act? So this is out. This is correct. Indian Contracts Act, very correct. Partnership Act, correct. Statutory acts that create A, C and D. A, C and D. HUF is not governed by Companies Act. Okay? Got it? Select the non-probabilistic sampling techniques from the following. Non-probabilistic. See this. Probability sampling, probability and non-probability. Non-probability. Probability are of 4 types. Okay? Kindly note. 4 types. Simple random. Simple random. Then second is cluster. Third is stratified. And fourth one, which is not given over here, stratified, is systematic. Systematic. These are the 4 types of probabilistic sampling. Okay? And non-probability you have many. Snowball is one of them. Okay, snowball. So, snowball over here, snowball. This snowball is asked many times in exam. In this what happens, whenever you do this snowball sampling, what do you actually do? The respondents which are there, see here, you are a main member over here, you have 3 respondents. So you tell each respondent to find out again 3 respondents. So it's like that MLM, multi-level. Respondents themselves bring the new respondents. So that is snowball. Okay? Got it? Next. Dash approach of Basel II Accords for credit risk has been implemented for banks in India. So dash, what is the approach applied by banks in India? Okay, for credit risk, specifically for credit risk. Standardized FIRB, AIRB. Standardized foundation internal rating and advanced internal rating, and none of the above. That can also be the answer. What is the answer over here? What do you think? Standardized approach. Standardized approach is an approach used, recommended for all the banks in our country for credit risk. So this is standardized for operations. It is at least basic indicator. Okay. So standardized approach. In standardized approach, what is this approach? In standardized approach, you get the ratings from the external agencies. Okay, external agencies. There you get the ratings. FIRB, foundation. These two are IRB based approach, internal rating based. In FIRB, the parameters are given by RBI. In AIRB, everything is decided by the bank. Okay. So, which approach is used in our country? Standardized. Dash is the process by which a lender, banker appraises the technical feasibility, economic viability, including credit worthiness of the prospective borrower. So, how will you check the technical feasibility, economic viability of the borrower? Technical appraisal, statement of sources and application of funds, credit appraisal and risk management. The banker will appraise, means the bank, whenever you do a loan proposal, you should appraise that client, isn't it? So how will you know technical feasibility of that client? Technical means whether this is workable. Then economic viability. Again, workable, whether you will get profit or not. Including credit worthiness. So whenever you are saying credit worthiness, credit appraisal. Okay? Through credit appraisal, you get all these terms. Okay? All these terms, so you get it through credit appraisal. Credit appraisal, basically whenever you say credit appraisal, it means it has three parts. Technical appraisal, then your financial appraisal, technical, financial, and one more is there. Okay, so basically there are three approaches. Technical is there, financial is there, management. Yeah, that's what I was thinking. Three appraisals are there. Technical, management, and financial. Okay, technical, management and financial. Got it? So these are the three appraisals in credit appraisal, and this is used to find out this technical feasibility, economic feasibility. See, name itself will tell you technical feasibility is over here. Management means whether any of their management directors were NPAs earlier. Have they become NPA any time? Have they defaulted any time? All this. And financial means basically ratios. Okay? Which among the following is untrue regarding the term loans by banks? Untrue. Untrue means false. Which of them is false regarding term loans? Asset liability matching is considered as an important factor in term loan financing. You want incorrect, kindly note, you want incorrect. Important factor in term financing. Installments in term loan that are payable within 1 year is considered as current liability. Repayment of any kind of term loan shall be in equated monthly installments. Current ratio is considered the most important ratio in appraisal of term loan. Which one? Now, this everyone must be able to solve this. Give the answer. Yes? Yes. What is the answer? Is asset liability the important factor? Yes, it is. Because ALM is an important factor while giving any term loan. Otherwise, if there is a mismatch in the loans and the deposits, RBI will catch you. Okay? Installments in term loans payable within 1 year is considered as current liability, obviously. Current liability. Okay? So, installments here, whatever is in 1 year is considered as short-term credit within 1 year. The risk factor is also lesser, 20% over there. Whatever is beyond 1 year is 50%. Okay, so current liability. So this is true. This is true. What about this? Repayment of any kind of term loan shall be in EMIs. Obviously, that's what we do in term loan, isn't it? True. There are certain loans which are called as bullet payments, but those are short-term nature. Generally, bank-to-bank loans within interbank loans are of bullet payment. Okay? There in bullet payment, what do we do? The principal and interest is paid immediately at the same time only, at the end. Otherwise, here, everywhere it's this installments. So, current ratio is not an important factor in term loan. It is for CC. Term loan is DSCR. DSCR is the important ratio in term loan. Got it? So, current ratio is not that. This is false. You want this only, false and true. Which among the following is not a micro level step taken in mitigation of credit risk? Not. Again, not. Improving sanctioning and delivering process, micro level, micro level. Obtention of collateral security. Monitoring and review of individual proposals, categories of proposals. Periodical review of exposure limits for business and industry. Which one is not? Kindly note, not. Which one is not? Think. Micro level. We are talking of micro level. Which one is not of micro level? Improving sanctioning and delivering process. This is related to the operations. Micro means operations. So this is true. Operations. Okay. Obtention of collateral security. True. Again, because this is again an operational level problem. So true. Monitoring and review of individual proposals. Okay. Categories for the proposals. So individual proposals. That is also true, because individual proposals you have to monitor always. Periodic review of exposure limits. Now this is done at the branch level. This is done at the HO level. It's not a micro level, it is a macro level. This is a macro level part. Macro. This is a macro level part. Okay? Got it? Next. So, what is the answer? But answer is this. Okay? This one. False you wanted, na? Untrue. Yeah. So, this is the answer. D. Under which of the following circumstances SURFACE Act is not applicable? Not. SURFACE Act is not applicable. There are certain terms and conditions for SURFACE Act to be applicable. When an NPA loan amount is less than 30% of the principal and the interest, is it not applicable then? See these options A and B. When you are not applicable, so it is not applicable. I'll give you the answers also over here. The actual answer for this is 20%. When the NPA amount is less than 20% of the principal and interest, then this SURFACE Act is not applicable. Okay? Then next, it doesn't apply to outstanding loans above 2 lakhs. It doesn't apply to outstanding loan above 2 lakhs. doesn't apply. The criteria is if it is less than 1 lakh, then it doesn't apply. So this is also not applicable, na? Not applicable, this also. Okay. Conditional hire purchase where no security interest is created. Conditional hire purchase means what? Basically, hire purchase. Hire means this is not a permanent security taken. So here also it won't be applicable. So not applicable. Not over here. Not over here. So answer will be B and C. Okay. So when NPA loans is less than 30%, then it is applicable. Below 20%, it's not applicable. Okay. So B and C is not applicable. It doesn't apply for outstanding loans above 2 lakhs. Okay. So actually it applies. Okay, one sec. Let me see. It doesn't apply for outstanding loans above 2 lakhs. So if a loan is above 2 lakhs, will it not be applicable? It will be applicable. One sec. Let me remove this. This is applicable. Okay. So this is false. I got confused between this. So this is wrong. This is also wrong. Answer is C. Conditional hire purchase. So answer is this. Okay. Kindly note. Answer is this. C only. Answer is C only. Okay. C. Got it? Yeah, correct. Answer is C because this 30% is correct. Okay, because if it is less than 30%, then even then SARFAESI Act is applicable. Okay, if the loan is about 2 lakhs, even then it is applicable. But here it is not applicable. That's right. C only. From a population of 600 with known standard deviation of 1.69. With a known standard deviation of 1.69, a sample of 30 items resulted in 34.5 as an estimate of mean. Find the standard error. Numerical. Now look at this. What is the answer? What is the problem and what is the thing? See here, this is known as population is known over here, 600. So known population, it means finite population. Finite. This problem is of finite population. Finite. Now standard error formula for finite population is different. What is it? Finite population, what is the formula? Psi upon root of n, psi standard deviation upon root of n into root of n minus n upon n minus 1. Okay, psi upon root of n into root of n minus n upon n minus 1. Okay, so what is psi standard deviation? Is it given? 1.69 given. So 1.69 divided by what is the small n is always the sample. So root of 30 into what is capital N? 600. 600 minus 30 divided by 600 minus 1. 1.69 upon root 30 into 600 minus 30 upon 600 minus 1. Solve this. Solve this everyone. So let me also solve it. It is also new for me only. I have just now taken this numerical. So what is it? 1.69 divided by square root 30. Point 0.308. So this is 0.31. I'll take it directly. 0.308 it's coming, but let's take this one and this bracket now. 600 minus 30 is what? 570. So 570 divided by what is this? 570 upon 599, right? upon 599. So 0.95 and square root of that. Square root of 0. What is this? 95. 0.95. Square root of this. Multiply this. So it is then square root of this. Do this now. Square root of 0.95. So square root of 0.95 into what is this? 0.31. 0.31. So 0.302. So answer is 0.3021. Something like this. See this. So this will be the answer. 0.308. Okay, because this I have taken it round. That's why 0.302. Okay. So it is 0.308. This is the standard error. Remember, whenever it's infinite population, the formula is psi upon root of n into root of n minus n upon n minus 1. If it is infinite population, it's simply psi upon root of n. Okay? Got it? Let's move on. Now, before going, everyone kindly join the Adda 24/7 batches. Immediately join it. See here, Mahapack. Mahapack is the best package for you. Always purchase through the app. In the app, you will be getting 1% extra using the coin system. So join through the app. 1% extra. Okay. So Mahapack 2.0. If you look at this, say this. In Mahapack, you are getting 15 plus batches per subject. 15 plus. Okay. And 15 plus batches per subject plus you get ebooks, you get tests, you can online, you can AI assistant. Everything you get it in this piece only. So join this. 15 plus batches means those many times revisions you will be having. Don't miss it. Tests are one of the best tools. It's like the actual exam. Whenever you give the test, it's actually like giving the final exam, isn't it? Practice. So join this. Use the code Y432. Okay. When you use the code Y432, you get maximum discount. Okay. 77% discount plus 1% through the app. 78%. So don't miss this. Okay. Join us up. Bye.